Statistics South Africa has announced that the country's gross domestic product grew by 0.4% during the first quarter of the year compared to the previous quarter, despite record levels of load shedding and aggressive rate hikes. This marginal growth means the country has avoided a technical recession, which would be 2 consecutive quarters of a shrinking economy. Although the South African economy is now slightly bigger than before the COVID-19 pandemic, it still remains below its peak in the third quarter of last year. The economy grew to 1.152 billion rand in the first quarter and is lower than the third quarter of 2022 when it was 1.161 billion rand. Johann, Chief Economist for Old Mutual Investment Group, joins me now to look at how South Africa skated by. Johann, welcome to Business Edge. Thank you so much for joining me.
Hi there.
So let's look at this number. So given the power cuts, rising inflation, the historic levels of unemployment, were we expecting even this amount of marginal growth to come with the figures that Stats SA shared?
Yeah, we did expect some positive growth, but because of the low base of the fourth quarter of last year, but also the economy has shown more resilience in the face of the load shedding than what people feared. As you rightly said, it's still very weak growth, though. It's very dismal. But that recovery from the fourth quarter into the first quarter, even though it's very slow and very weak growth, people feared a far bigger slump. People feared an actual recession, which would have been 2 negative quarters consecutively. But given the extent of the load shedding, people thought that the slump would be far more severe, especially in the production sectors of the economy, mining and manufacturing production, for instance. But the fact of the matter is that the economy has been far more efficiently in its usage of electricity. So to generate the same GDP as in the year 2000, we now use 25% less electricity. So more productive, more efficient processes, for instance. So yes, it's not great. Yes, we all feel like we're in a recession. Confidence is bombed out. Nobody's really confident about the economy, but things have been slowly improving on the underlying position. So less negative than feared.
Okay, so let's look at the number. Even though we saw a contraction from the economy in the first quarter of 2022, a 1.1% contraction, what were the main factors that seem to have contributed to this recovery or to this less than negative or less than worse of what was expected?
Yeah. Surprisingly, most of the sectors of the economy actually showed positive growth. The 2 negative sectors were electricity, of course, as we expected, given the problems with electricity production. So that was negative, but agricultural production was the other one that was negative because of foot and mouth disease that impacted on meat production, but also some of the field crops. But apart from that, mining production, manufacturing production, construction, retail trade, the financial sector, all of those were positive contributors to GDP in the first quarter. Again, they were all negative in the fourth quarter of last year, so that created a very low base. So not a high hurdle to get into positive territory, but still, everybody expected mining and manufacturing production to be deeply negative because of the electricity outages.
So I find that quite interesting. So as you said, 8 out of 10 industries were in the positive area, whether it's small or not. We're going to be happy with what we've gotten. Agriculture, as you said, it slumped by 12.3%, way down by the decline in production of field crops and animal products. But these industries that are electricity heavy, mining, manufacturing, for some extent, transport, storage and construction, where do you see that growth coming from? That seems to be despite the load shedding that the economy is experiencing.
Well, to some extent, the global economy has been helping in the manufacturing side. We know that South Africa's trade surplus improved quite a bit, exports especially, between the fourth quarter of last year and the first quarter of this year. And we've seen that the global economies are looking far better than what everybody feared late last year in terms of that rebound after the Chinese reopening, but also lots of sustained strength in Europe and in the US economy. So our exports performance doing pretty well from mining and manufacturing side. And in the other sectors, a big part of construction and investment improvement coming with this shift of electricity production from the state-owned utility company, Eskom, towards the private sector. The private sector happily taking up that role, investing heavily, in energy generation projects. And apart from just the shorter term view that things are negative at the moment and not so great in the first quarter, that private sector participation in the economy, in energy generation, and that fixed investment that's needed to bring that, that will help the economy down the line quite significantly. Not only in terms of that investment coming, but also the fact that the load shedding risk of electricity blackouts will reduce relatively sharply over the next 12 to 24 months.
Quite interesting. So let's go back to the fact that South Africa simply just happened to bypass recession at this point. But again, as I said earlier, we've seen this record high unemployment rate that the country has been battling with, inflation as well, both the imported and of course local at that. But when we look at the recessionary level, just managing for South Africa to get right above that level, what do you think the impact will be on the current and of course future unemployment trends or unemployment level as it may be?
Yeah, unfortunately, there's no good news there. To seriously make any dent into the unemployment rate, we need far higher economic growth on a sustained basis. It doesn't help you if you get 4% growth in 1 year. You need 4% year after year after year. And only then gradually you'll get some improvement in the unemployment rate. But you also need a deregulation in the labor market. Private sector employers still not willing to employ, in their perception, employees that's militant and expensive and uneducated. So there's a structural need to transform education system, more skilled employment, to get a more flexible environment where when there's a recession or companies under pressure, it's easy to get rid of employees because it's flexible labor market, they will rehire those employees quite substantially back later on. There's also a definitional issue here. We've seen some improvement in actual employment, but because there's so many disillusioned people out there that hasn't been actively looking for employment, they're not part of the definition of unemployed. So as people see employment recovery, they gradually get back into the labor market, they get counted as unemployed, so the unemployment ratio remains high for a long time. So if we're looking at the unemployment ratio, there's no good news in the short term. It's going to stay high for a long time. Underlying, though, we do see some creation of new jobs, but we need better economic growth on a sustained basis, plus also deregulation of the labor market if we're seriously going to make any impact.
So I like the fact you mentioned something about definitions, and I want us to look at that now because this is South Africa avoiding a technical recession, 2 quarters of negative growth. But as I said earlier, for many South Africans and probably many Africans across the continent, even though their economies are not technically in recession, their incomes have already entered that recession. So what is it in terms of the real economy? So we can look at stats that say, we can say it's not meeting the equations that will give us a recession, but in terms of the real economy, South Africans are probably already in recession. What do you make of that?
Yeah, the word recession itself is probably a misnomer, as you rightly argue. The fact of the matter is that if we ignore 2020 and 2021, the COVID interruption, the slump in the economy and the recovery in the economy, in the 5 years between 2015 and 2019, the South African economy only grew by 1% per year on average. That is as close to zero as anything, which is exactly your point, that very weak growth over a sustained period of time puts people into that recessionary condition, to use the word. So very weak growth is as bad as a mild or technical recession. And if this continues for a long time, people's incomes, because of employment situation, etc., comes under pressure. But then I work in an investment environment. And if we work in an investment environment, we need to look forward. And it's this policy shift that's busy happening in South Africa, this embracement of the private sector by government. Private sector getting involved in traditional state functions or state utility company functions, the generation of electricity that's shifting towards the private sector. Down the line, things are falling in place for somewhat better economic growth. So hopefully we won't be stuck into this 1% annual average economic growth. There's an environment building. We're not there yet, but there's an environment building towards somewhat better economic growth over the next few years into the medium to longer term.
let's go back to the industries. 8 out of 10, some positive growth there. In terms of projecting forward, what are some of the industries? Are they going to be this same 8 out of the 10 that you see will be promising a stronger rebound and will help to get economic recovery moving, to grow and even contribute positively to the country's economy? Where are we putting our eyes?
Well, firstly, if we look at the expenditure side of the economy, we've talked about the production side, manufacturing production, mining production, etc., a long time. But on the expenditure side of the economy, where we look at consumer spending and government spending and fixed investment, the fixed investment part of the economy, that is going to drive some of that growth that we expect going forward, mostly from the private sector side. And within that, the private sector fixed investment, the energy investment, there's massive, large-scale energy investment from the private sector in the pipeline. And that will start to drive some of that GDP growth. That will lead into better economic growth over a broader spectrum in terms of allowing the economy to have access to more electricity, companies being able to expand, companies being able to employ more, and then gradually that will drive consumer spending. So a big driver over the next few years will be private sector fixed investment. But also the average consumer, the underlying financial position isn't that bad in South Africa. Yes, consumers feel depressed, but consumer finances are actually not that bad. They get wage and salary increases above inflation, and inflation is going to fall quite substantially over the next 6 months in South Africa. So that means a real positive gap, getting higher salary increase than what the level of inflation is. That helps consumer spending. So consumer balance sheets are also relatively okay, and the lower income groups are supported by the government's social grants and the COVID grant that has been extended. So the underlying financial position of households, it's not great, but it's not as dismal as the feeling out there is, because we're all depressed in South Africa about load shedding, about potholes, about politics, etc. And that does impact on your ability to spend, but it doesn't mean you save if you don't spend, and that builds up your balance sheet to some extent.
Johann, before I let you go, I'll put this in 2 parts. In terms of the data that has come out from Stats SA, we're still in the half year. We know there's a lot more that can happen in this coming year. Do you expect that we could see this positivity continue? Maybe not necessarily grow, but at least continue into the end of the year. And then I'll ask also in terms of the 0.4% growth rates, what does that portend for the country's outlook for the rest of the year, for the economic outlook for the rest of this year?
A large part of that is very difficult to forecast because it depends on load shedding. We've had a couple of days thus far in June, in the midst of winter, very cold winter, that we haven't had load shedding during the day and only in the peak evening hours. So that is some improvement already relative to expectations. People have been expecting significant load shedding. So that's starting to make an impact. Yesterday, we had the April manufacturing production numbers, which surprised strongly on the upside, positive growth again. So there's some of that resilience in the economy that we talked about earlier that's starting to come through. Yes, we need end to load shedding or significantly lower levels of load shedding. And we need to see some improvement in the areas where consumers have been worried about politics, whether the Russian president is going to visit South Africa and put us in a dilemma in terms of having to arrest him or not. So there's lots of other issues around. But I do expect weak growth for this year, but growth could turn out to be positive. Growth could actually turn out to be around 1% this year, not negative, as many analysts expect, because of this underlying improvement, this resilience in the economy. So this year is already going to be weak. Even if it's slightly positive, it's weak. Over the next few years, that positivity should build towards getting growth around 2.5% in the medium term.
All right, so weak growth, some positivity to that. We do have a few more months in the year. Things could change, and if there's a swift turnaround in the load shedding, many of us expect that South Africa's economy will quickly turn around as well. Johann Els, Old Mutual Investment Group's Chief Economist, thank you so much for joining me on Business Edge.
Thank you very much.